Thursday, November 9th. Market analysis, Stan Ehrlich. Good morning. 9:56 California time. Little bit past the middle of the trading day from the 6:30 to 1 o'clock California time. Typical market hours. Not, of course, for forex or futures, but for securities and indexes. We always start out with the stock market indexes. And we have the spider, I meant the S&P 500 E-mini Christmas futures contract showing at the moment. We know that the October lows took place on October 27th in oversold condition and support, and just simply opened higher and turned around and has rallied for 9 days in a row at the moment. We're very slightly higher on the day, and the spider, it's up only 40 cents. The DIA is up almost nothing, 14 ticks, and the Qs are up almost a full point. So we're, momentarily, and we've been lower, been higher, been lower, been higher a few times today so far. So it looks like the markets are losing momentum. No surprise after 9 days, today being the 9th if it closes higher, in a row. I don't remember 9 days in a row the market went straight up, or even for that matter straight down. Very, very unusual. So the odds are extremely likely that the market is going to start to flip-flop back down, which I fully expect, and have been saying for this week that it's losing upside momentum and looks like it's going to turn down. It hasn't yet, but it hasn't gone up much. So we're at a resistance level or close to it, depending upon the index, and you'll see the rest in a moment. And overbought today in particular in most of the indexes, because we made the slightly higher highs, which was necessary to turn into overbought conditions. So watch out. We're about to have maybe a 50% correction of this rally we have seen. Now, futures contracts don't particularly gap up or gap down all that often because they are open almost 24/7, not quite, disallowing the gap feature. But if you look at individual contracts that are regular historically trading hours, like the spider, you have 3 gaps from the last week and a half, last week and this week. So, well, actually it's last week, all of them. I don't think this gap at 418 is going to get closed, but the gap that comes down to 423 3/4, I think is going to get closed. Right now, it just looks like approximately a 50% retracement. Is a very large gap, and I think it's going to come down to close this gap first. Of course, 431.24 is what it needs to touch, and that could be any time now. Remember, if we close below yesterday's low today, we'll have an official ER sell signal like the one on top of the market on July 27th. Now, I don't think it's going to be that significant, or the buy signal we got on October 13th of 2022, not showing on the screen at the moment. But yeah, it's going to be a sell signal that'll come down and close some gaps, maybe develop into a much better, bigger bottom formation I'll start talking about if it starts to develop. And then up we go, and I believe up we go is going to happen one way or the other during the next few weeks, except for the downside correction first. And that's what I vote for, downside correction first. Around 425 is an average. It's in the middle of the gap. And then up to new high ground completely. Now, I got to mention that today's opening tick and the high of the day finally closes an old gap back September 20th to September 21st, almost to the exact tick. I think it was like 3 or 4 ticks higher than needed, ridiculously accurate, on top of the fact that it tried to do it back here on October 17th. So that's done. We're overbought. That's done. All we need now is for this market to have a low lower than yesterday's low and stay down there, and then we have an official sell signal. One way or the other, these indexes, in my opinion, are about to go down some. Next chart is the 1-minute spider, and we can't tell too much from it at the moment. It's just having, since the beginning of the day right here on this up gap right there, trouble. It made a low, came back, could not make a new high, drifted off a little bit, and we're floundering around very, very slightly, 29 ticks higher on the day at the moment. Next chart, QQQ, now for the third day in a row, overbought. Now I realize it's above and staying above a major previous bear trend line, which is usually a bullish sign. But the problem is the overbought condition pretty much supersedes that, and it will overpower it. And so I do think these gaps are going to get closed. The middle gap in particular at 358.18 very soon, maybe take about a week, and then up, up, up and away. Next, NASDAQ futures, same as the QQQ, overbought today for the first time. Now most of these indicators are overbought, indexes are overbought, and we're going to come down around 50%-ish. Next, DIA, two gaps to close. The one at the lower level is the one I think that's going to be the bottom of the break at 333.5, and then up. Next, the Russell 2000 is going to come down all the way to 165.68 and close a gap, and then turn up. A lot of people don't realize that the low that we made in oversold condition just after a buy signal that didn't work quite right, we made new lows for 3 full years, almost to the exact month, I think, and then shot straight back up again with the rest of the indexes, of course. And of course, that was the October low, October 27th. So we're already well on our way down and have closed the first gap already on the Russell 2000 and getting not too far away from the other gap. So it's kind of falling into place. Next, we have a huge down move here in the QQQs all of a sudden. Okay, this warrants a look back here for a second. What's happening here? Okay, while I'm talking, yakking away, we have a sharp break. Something has happened at 10 o'clock California time, 3 minutes ago, causing new lows for the day to happen dramatically on the DIA. This is almost a new low. Oh, good. My commentary is coming true in front of my face. Excellent. I don't get a chance to talk about this very often. Not that I'm not right once in a while, but having it happen while I'm showing you guys is a treat. Wow, look at this. Okay, we just broke from 437.60 to 435.60, 2 full points in 3 minutes. Looks like maybe it's flattening out here at the moment. It did get extremely oversold on a 1 minute. That's a 6. It actually was below that. Yeah, this looks like a highly likely spot for it to stop going down just for a little bit of time. And I mean 5, 15, 30 minutes. All right, excellent, excellent, excellent. We are coming close to a bearish engulfing red sell signal in the QQQs if it gets below yesterday's low. The same thing will happen in the S&P 500. The same thing will happen in the NASDAQ futures, which is still higher on the day. It's delayed data, so it hasn't caught up to the 10-minute delay. It's got 6 minutes to go before it starts to crash. And that's about it. So those indexes, 3 very important ones, Spider, Qs, NASDAQ, are going to have bearish engulfings if they get below yesterday's low. Next, the October low chart. And I'm probably going to stop showing you guys this because I've been doing it for 3 months. I tried to pinpoint the price. I missed by 1.5 points. I tried to pinpoint the point in time, and I was too early by a week and a half or so. But it was still in October, and it was real close to the price level I thought it would come down to. So we're about to have, I think, a red bearish engulfing today. Futures, futures, futures. Good. E-mini. A little delay here, so it hasn't broken down and take about another 5 minutes. It will. Same thing for the NASDAQ, delayed data. Now, the bond market is a little lower on the day. and it looks like it's having a very normal downside correction. We were very, very, very close to overbought, and we were a few days ago. No surprise here. Looking for a bottom formation to develop, actually. We'll talk about that when it gets closer to doing it. I think it was the heating oil or unleaded gas that I talked about it weeks in advance, and now it's already happening. We'll get to that chart in just a couple of minutes. 10-year notes. Could have an outside down day, not going to be a bearish engulfing ER sell signal, just simply a Japanese candlestick bearish engulfing, which means it's probably going to go down some. But I think we've seen a bottom. I think we've seen a major low, and it's going to turn back up again very soon. Next, crude. Bullish engulfing today at the moment. Now, because we have the higher high, lower low, we've got the bullish engulfing. Currently, we're higher on the day, so it totally qualifies. But because of the fact that we were oversold on my custom relative strength index, creates the green bar. This is the code for ER signals, which I've been working on for over a decade. Looking pretty good. So I'm expecting a rally in the crude starting now, today. Probably a minimum up to 79.80. Could be higher. Next, natural gas. Support level is broken, but it's not staying there. It's popped back up into the green zone here, which is the support area. And if it closes in the green area or higher, we might even have a bullish green engulfing buy signal. We've had a lot of red ones around or very, very close to important highs. We've got a good green one back here that's a big bullseye on the bottom. And that's how it happens. Today, if we can rally, and I don't know that we can, maybe not, above yesterday's high, it'll turn green and be a buy signal and give you exact specific instructions as what to do, how to do it, why to do it, when to do it, where to do it, etc. Next chart, heating oil is the one I was talking about. And I've got my markings for my shoulders and the head of the formation. And today it dropped below the neckline. Last time I took a peek at the chart, it was below the neckline, near the low of the day, but it's popped back up a little bit. Now, this could end up being a minor false breakout and bounce slightly for a few days back up into this kind of situation, 207, 208, but to small 208s, but not very far, and then crash maybe tomorrow, Friday, maybe early next week. If it stays below the neckline a little bit lower than where it is right now, it'll be considered to be an official downside breakout. The minimum downside objective on the pattern is 2.12, we'll call it 13, 2.13, and that's not going to happen tomorrow. So heating oil will probably take a couple of months to get down there. Yeah, 2 or 3 months to get down there. But hey, I started talking about this thing way back here, October 16th, close to a month ago, and follow through with it, watching it bounce around every single day. So here we are, possible major downside breakout, possible completion of the formation, which has been built. Will it work or not? Next chart, gold. Got almost the top of the market, got the bottom of the market, got the bottom of the market, got the high of the market. We have had some fantastic signals in precious metals this year, got the high of the market and got the low of the market, and that was all during this year. Gold's probably been the best one responding to my technical analysis technique ER signals. So I am still bearish, looking for more of a downside correction, but I've got to bring into the conversation we're getting close to oversold, and that implies a low. Now, we're nowhere near the closing of this gap down here at 1,850. So sideways, maybe a little bounce before new lows, but I have to continue to be bearish. I've got no good reason to be expecting a large rally, maybe a little bounce for a day or two, and then kaput. Next, silver. New lows in a support area in the last couple of days. So I'm not surprised we're bouncing a little bit momentarily, but the highs have been lower. And look at this. You gotta love it. Green on the bottom day, red on the top day, red on the top day, red just before a damn big crash, red on the top day, green on the bottom, green at almost the bottom, and red on almost the high. Next chart. We're getting close to oversold, very, very close, and very close to a previous low, which was green on platinum. We caught the bottom, we caught the top, we caught almost the exact bottom in platinum. So are we going to bottom out again? Yeah, I think so. Right in this ballpark we are right now. I wouldn't be surprised to see it come down to 857 and, turn back up. So I think we're about to turn back up. Next chart, high-grade copper. Can't seem to get a good handle on this. It looks bearish because the trend is down, lows are lower, highs are lower. So I'm kind of expecting it to challenge the bottom here at 3.54 and maybe even make new lows. Next chart, soybeans. We caught the bottom, ER buy signal. You can see the trade. ER1 got long when it made a higher high. Our trailing stop is the yellow line, and today we took a profit. Out of the trade, back to the drawing board, looking for new signals. We'll see what happens next. Not that I'm bearish, we just got stopped out of our long position. We did get overbought, and that's no surprise that it turned down. We could get back to a little support here, and we'll see what happens if it gets into the blue area. From a longer term perspective, this is quite complicating because this market has been going sideways for a year and 3 quarters. Yeah, since the early part of 2022, way back here, January, February, about February. Highs are a little higher, lows are almost exactly the same, and a lot of activity in that range. Next chart. We're still short soybean oil. This has been a great trade. We got short on the second high of a double top. Perfect. And we are still short since the date of August 21. And we shorted it at precisely 64.30. So current, just to the right there, 50.31. Current trade stop a little under 53. Huge profit, great long-term trade, head and shoulder top formation, worked completely accurately, pretty much out of a textbook. Well, is it bottoming out or not? There's a darn good chance, I'm not sure. Oversold condition, trend is still down. Got to wait a little bit. Next, meal, soybean meal, overbought, coming back into a support area. This just might hold in here and start to rally a little. I'm not particularly sure about meal, so I'm not going to linger on this anymore. Next, corn. I think it's going to do the same thing, and it is go by the way of wheat, which has made new lows, broken support, made new lows, tested resistance and failed on rallies and made new lows. This is exactly what I think corn is going to continue to do for quite a while. We had a buy signal that did not work. Another sign that it's very, very weak. What can I say? Bearish on corn. Here's the wheat. Same thing. Started to do this, what I was talking about back in mid-August. Lower lows, rallies have failed, and then new lows. And I think we're about to have new lows again. Looks like yesterday's rally is failing, and then we're coming down some. So neutral to bearish on wheat. Next, cattle, oversold and second day. It's about to bottom out. I'm going to rescale this for you so you can see what the heck's going on here. This is a new low now in cattle for the first time since June 1st this year. No particular top formation that I can come up with. It just simply had a 1, 2, 3 to the highest high and a bearish engulfing, of course, on top, like that one, like that one, like that one, like that one, and on the bottom, almost the lowest low. Not but one buy signal in here. But this looks like it's about to bottom out. It's getting oversold. It's coming back to a different support area, which would be around 171.40. It could do that before it starts to bounce. Don't go short down here. This is not a good place for going short. This is a good place for looking for new longs. Next, live hogs. Got the bottom. We got stopped out of the trade yesterday, climbing a little bit today, had a great trade, kind of stuck between a rock and a hard spot. Resistance above has stopped it. Support below has been okay, but not very accurate. Probably going to drift down some in my estimation, but I'm not too sure about the hogs. OJ, I screamed bloody murder on October 31st because of the gigantic ER sell signal we got, and I was totally expecting it, talking about it before it happened for weeks. I thought that was going to be a good signal. It didn't turn out to be, but that's a whopper, and it turned out to be 1 big, 2, 3 big down days. Made some very good money, and now we're coming up toward a previous bull trend line underneath it and closing a gap, which I talked about. So we need a little bit more strength up to about 373.5, which is very close to today's high, 371.85, and then turn down. Next, cocoa, overbought. I got to say the same thing I've said every time. It's extremely overbought. Extreme number of days involved. Looks a little like OJ. And I think it's going to turn down suddenly and quickly, maybe somewhat similar that it did on August 7th. Since it's got the higher high, in fact, the highest high for the whole trend for a huge amount of time, maybe historically. So it's cruising for a bruising. Next, coffee, getting close to topping out, I think. Not happening yet. Waiting for a sell signal. Next, sugar. Kind of the same comments. Certainly not going up anywhere near as fast. In an area resistance that it's having a little trouble at, but it's still managing to stay in an uptrend short term. Let's see what happens next. We've got oversold conditions, looking for a rally in cotton, starting to do so today, needs to get above resistance. Then it could pop right back up all the way to 87 or 88 again. But so far, just the first day up. Not very convincing yet. I wish that it had a little bit lower low, and then we would have green, because we've already got a high higher than yesterday's high. We've already got oversold. So it didn't quite have the bullish engulfing. Next is the E-mini again, coming down. We're coming very, very close. Let's go back to my index page here. And do we have any bearish engulfings yet? No, still yellow, still yellow, still yellow, but close to the lows. All we need is one more significant drive to new lows, and I think we'll start making it below yesterday's low. And tomorrow, I will maybe be able to show you red sell signals. You guys have a great day. Profitable trading to you.